In a recent video, we looked at what filing status you would use if your spouse died during the year. But what about subsequent years? For certain surviving spouses with children, a special filing status is available that can go a long way toward reducing tax liability. I'm the Tax Geek, and here is the qualifying surviving spouse filing status, oversimplified. As I said in my previous video on death and taxes, you are still considered married as of the last day of the year if your spouse dies during the year. Thus, for that year, and that year only, you can file your return jointly with your deceased spouse. This lets you take advantage of the higher standard deduction and lower overall tax rates of the married filing jointly filing status. The next year, most surviving spouses revert to the single filing status. However, if you have qualifying children, for the 2 years after your spouse's death, you can choose the filing status known as qualifying surviving spouse. The qualifying surviving spouse filing status gives you the same standard deduction and tax rates as you had when you filed jointly with your spouse. Since many surviving spouses have a lower income upon the death of their spouses, this can result in a lower tax liability over filing as single or head of household. So who is able to be a qualifying surviving spouse? Your spouse must have passed away in one of the 2 years prior to the current tax year. For 2023 returns, the qualifying surviving spouse status can be claimed if your spouse died in 2021 or 2022. You must not have remarried before the end of the year. If you have remarried as of the last day of the year, you must file with your new spouse using a married status, either jointly or separately. You must have a qualifying child who lived with you for the entire year. This is usually a dependent child, stepchild, or adopted child. Foster children do not qualify unless they have been placed with you permanently pending a formal adoption. No other dependent relationships enable you to claim the qualifying surviving spouse status. A non-dependent child can still allow you to claim the qualifying surviving spouse status if the child in question could have been claimed as your dependent but doesn't qualify as a dependent because the child's income exceeded the income test amount, or you yourself are the dependent of another taxpayer. As an example, Liz's husband died in 2021. Liz's 20-year-old daughter Janet lives with her and works as a waitress, making $8,875 in 2023. Janet is not a full-time student, and Liz provides over 50% of Janet's support. Liz cannot claim Janet as a dependent because even though she passes the relationship and support tests, she does not pass the income test. Nevertheless, Liz can claim the qualifying surviving spouse filing status because the only reason Janet isn't Liz's dependent is that Janet fails the income test. If you need a refresher on what goes into claiming a dependent, there's a video specifically for that. Simply click the card above or the link in the description. Since Liz is claiming the qualifying surviving spouse filing status with a non-dependent child, she puts Janet's name on this line near the top of her Form 1040. Finally, similar to the head of household filing status, you must provide over 50% of your household support to claim the qualifying surviving spouse status. Going back to Liz, let's suppose Liz moved in with her brother Liam after Liz's husband died. Liam pays most of the household expenses, with both Liz and Janet contributing lesser amounts. This would disqualify Liz from claiming the qualifying surviving spouse status. If you're unsure whether you're providing over 50% of your household support, you can fill out this support worksheet, which is found in IRS Publication 501. So how much money can the qualifying surviving spouse filing status save? Let's suppose Liz has an adjusted gross income of $52,000. If she filed as head of household, her tax would be $3,442 before any child or dependent tax credit. By taking advantage of the higher standard deduction and lower tax rates associated with the qualifying surviving spouse filing status, Liz now has a tax of $2,476, saving Liz $966. You can only claim the qualifying surviving spouse status for the 2 years after your spouse's death. After those 2 years, if you are still unmarried, still have a qualifying person, and provide over 50% of your household support, you should qualify to claim the head of household filing status. A more detailed look at the head of household filing status can be found by clicking the card above or the link in the description. And that's an oversimplified summary of the qualifying surviving spouse filing status. It can't often be claimed, but when it can, substantial tax savings can result. You can find additional resources and information on this status in the video description. Please like the video if you found it informative and share it with anyone else who could find it useful. If you haven't already, subscribing to the channel and clicking the bell gives you notification of new Tax Geek videos as soon as they're released. And of course, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and stay tuned for more of your taxes oversimplified.